take a look at what Tom Lee just said about the month of June. Apparently, according to their research, if Q1 is positive and April is negative, ever since 1927, the S&P has been higher with a net positive gain in June 100% of the time. If you are actually in a bull market. If you are in a bull market, the average return in the month of June tends to be about 3.9%. If you are in a secular bear market, you still tend to be positive in the month of June 82% of the time, with a positive return of 2.4% for the month. That is, again, as long as Q1 is a net positive and the month of April is negative. Again, going back to 1927. Today, this is looking a little bit choppy as the Russell 2000 is down 0.5%. The Dow is getting absolutely disrespected today, down about 0.76%. The Nasdaq is up about 1/3%, and the VIX is up 6% today. So there is a rush to protection out in the markets. When the VIX goes higher, that means investors are going out and buying puts on the S&P 500. And the Nasdaq is barely positive today, all because of Nvidia. Like 100+% of this green day for the Nasdaq. Nvidia is up about 7% today as it continues on its parabolic rally post earnings. With it, AMD is also up 3%, and Dell is up about 2.5% today. So if you want to exclude Nvidia, hypothetically, from the markets, it would be a rough day today. I think a lot of this is getting ready for a potential disaster on PCE coming out on Friday. Market expectations are that PCE is going to come in at the slowest monthly month-over-month change throughout all of 2024, and some investors may be questioning that. I think inflation could even come in below expectations, but until we get to Friday, there could be some fear there. You also had some pretty hawkish comments from Fed Kashgari today, and we'll get into that in just a moment, and trust me, you do not want to miss it. But trust me, you do not want to miss this either. This actually took place on February 12th, 2024, an interview on CNBC with Tom Lee. Now, why am I sharing this? Well, because Tom Lee just shared it today, reinforcing his narrative. And specifically what he says at the end of this clip, I think is important.
I think now we're contractually obligated to mention NVIDIA at least 4 times an hour. I'm kidding. Sort of, Tom. NVIDIA, basically the same size now as Amazon. It's part of that group that we talk about so much. Is it a mania? Is it deserved? You just mentioned AI, but I mean, we've gone from $150 to $700 in less than 2 years.
I mean, it's pretty astounding to see the ascent, but we also know in the last 2 years there's been a lot of transformation, and I think really critical mass reached for AI. So to us, it doesn't seem like a bubble. There's real demand there. We're going to find out next week, obviously, but if there is a shortage of workers, we know that over time we have to replace salaried workers with silicon, and that could be several trillion a year of demand. So I think it's too early to say it's a bubble.
Look at that. Tom Lee going out of his way to reinforce to you in the markets that what we're seeing is not a bubble, that there will likely be more upside from here. And according to Fundstrat's analysis today that was just put out, the month of June could be a pretty good month. And given that report from Tom Lee and Fundstrat, if indeed June is a red month, it's going to be a historical anomaly. Because during bull markets, 100% of the time, June has been positive if Q1 is positive and April is negative. Again, Friday will be very important. We will get core PCE month over month, personal income month over month, personal spending month over month, as well as Chicago PMIs. Again, expectations are that inflation continued to slow in the month of April. But basically every single day of this week, you have moderately important data that comes out, including today. Today, you had consumer confidence that came out for the month of May, much better than expected. You came in at 102.0. The expectation was for 94. Last month, you came in at 97. So you were actually expecting confidence would drop by about 3 points. It actually went up 5. That's great news for the economy. or at least for the consumer. And that could be another reason why markets are generally falling today, because still the markets are under this narrative that we want to see weakening in the economy. We want to see things get worse, so the Fed cuts rates. But let me tell you right now, that is the furthest thing from the truth. All we want to see is inflation fall. We want to see the economy doing strong, because that means that corporate profits will come in good. If the economy gets weak, corporate profits get worse, it doesn't matter what the Fed does. If they cut rates 10 times, who cares? If profits are declining, doesn't matter. Stocks will do poorly in that scenario. The best case scenario is the economy holds up well, the labor market holds up well, but inflation falls. That is where you potentially get Tom Lee's prediction or projection of a 50% small cap rally in 2024. And in that specific scenario where the economy does okay, the labor market does okay, people stay employed, and rates can start to fall, then that will mean a broadening out of our markets. Something a lot of us have been waiting for years now. Tomorrow, we will get Dallas Fed Services, Richmond Fed Services. Those indexes can be important. We are expecting some pretty steep declines, but some improvement from last month. Not much improvement, but some. And I imagine if these numbers come in better than expected, fine, that's great news for the economy and the service sector, but markets are probably not going to like that. We will also get a 7-year bond auction at 1 p.m., and I'm expecting quite a bit of volatility from that. Fed Williams speaks at about 2 p.m. The Beige Book comes out at about 2 p.m. as well, and that's basically a transcript or rundown, if you will, of how the different Fed banks are seeing economic activity and inflation in their districts, in their areas. Like the Atlanta Fed's going to cover that area. The Cleveland Fed's going to cover that area. The Boston Fed's going to cover that area with a surrounding like 100-mile radius or so. Chicago Fed, Kansas Fed, San Francisco Fed, all of your different Fed banks put out this report. Here on the day today, 10-year Treasury yields are marching higher yet again, up almost 7 basis points, which is quite a large move higher for a single day for 10-year Treasuries, with that yield currently at 4.54%. We do have some earnings for this week that are notable. Cava, Digital Turbine, Box, Heiko, Joy today in after hours. Tomorrow, pre-market, Abercrombie & Fitch, Chewy's, Dick's Sporting Goods, Advanced Auto Parts, and BMO. Tomorrow in after hours, you will have Salesforce, C3AI, UiPath, Okta, HP, and American Eagle Outfitters. Thursday pre-market, Canopy Growth, Kohl's, Foot Locker, Dollar General, Best Buy, Hormel Foods, Burlington, Birkenstock, and Build-A-Bear Workshop. Thursday and after hours is going to be your biggest day with Costco, Dell, Zscaler, Marvell, MongoDB, Ulta Beauty, Centennial One, NetApp, and Viva that will report. Specifically Dell, that one could be important for Nvidia and the overall AI trade. Ever since last earnings when Nvidia shouted out Dell stock has done exceptionally well. You do have about 4% of all stocks under their 50-day moving average. That's pretty bad. You went from about 55% of stocks above their 50-day moving average to 47.5% of stocks above their 50-day moving average, and you are really starting to see a narrowing of our markets yet again. More and more capital is just getting allocated to Nvidia and is getting sold from other stocks. Now, we did get a bunch of quotes from Fed Kashkari today. Here's one, not the most important one, but here's one that's could be seen as good, maybe. Fed Kashkari says, I certainly won't pencil in more than 2 cuts for 2024. And that's what the markets are currently pricing in. So I would think one of the most bearish, if not the most bearish Fed officials right now, or hawkish Fed officials, still saying that maybe 2 cuts would be necessary or likely in 2024. That might be seen as good news, but markets didn't react as if it was good news today. Fed Kashkari also said, I don't think that weakness in the economy is needed to lower inflation. Seems good to me. Here's one comment that really spoiled the mood a little bit. Fed Kashkari says commercial real estate is at risk. I expect big losses. That's not what caused stocks to fall today. This is one of the more important headlines from Kashkari. He says, we could stay on hold for an indefinite period of time. So on one hand, he says we could hold for an indefinite period of time. 2 minutes later, he says, I definitely wouldn't cut rates more than twice this year. They have no idea what they're going to do, what's going to happen with the economy, or what's going to happen with inflation. So you got to take them with a big grain of salt right now. And seemingly more good news from Kashkari. He said, I think the odds of the Fed raising rates are quite low. Another aspect of the CB Consumer Confidence report that came out today that did spook markets a little bit says average 12-month inflation expectations ticked up from 5.3% to 5.4%. And last but not least, Fed Kashkari said, I don't think anyone has taken rate increases off the table. And as a lot of people point out in the comments here, Jerome Powell did kind of take off a hike. I personally don't think a rate hike at this point is on Jerome Powell's table. I think, in fact, Jerome Powell's been begging for a reason to start cutting rates for quite a while now. And as I have mentioned here on this channel quite a few times, I do think we're going to get that first cut from the Fed coming July 31st. There is actually a greater chance of that today. Yesterday, Friday, you had a 10.2% chance of a cut July 31st. Today, you actually have a 12.2% chance of a cut. So that's up 2% today. General consensus is the Fed will not be doing anything on July 31st. 87.4% odds of that. Your CNN Fear and Greed Index is neutral today at 52. Yesterday, you were neutral at 53. So despite the average stock getting, let's be honest, whacked quite a bit, it's not really moving the needle as far as overall fear or greed. Let me know where you stand on all of this information down below in the comment section. The NASDAQ and the S&P have really bounced back so sharply ever since we did hit those lows around April 19th or so. In just a month and a week, 5 weeks, you have went up on the NASDAQ. I mean, quite a bit. You want to call it 11.5% or so. Maybe you're due for a little bit of a pullback. Maybe we shouldn't be surprised if that does happen. As JP Morgan has said, and I've said in many videos now, you really want to watch that 50-day moving average across all your major indexes, the S&P, the NASDAQ. If indeed you break under that 50-day moving average, that's where things could get a lot worse for markets. But is that going to happen? I don't know. To break under the 50-day moving average for the NASDAQ, you would need to see a fall of about 4%. So, I mean, maybe not. We got most of our catalysts out the way. It's really going to depend how inflation comes out on Friday. If inflation comes in hotter than expected, then you're most likely going to retest that 50-day moving average. If not, fall under it. But again, I'm not expecting inflation's going to come in hotter than expected. So with that said, thank you for watching. Hit that like button as well as subscribe to the channel if you want to make more money in markets, and at the very least stay more up to date and educated on what's going on and what's moving stocks each and every single day. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.